Hello everyone, it's Calvin here, back for 2014. It has been a while since I've done a video, but I am here back with the SPY guys. I've been calling a top for 2014, well, a lower year, basically because it's been a while, so let me try to go over what I've been seeing for the year. You already made a really bullish green candle for the year, so usually when you get these igniting bars and it's a breakout as well, you usually get some kind of consolidation year. And this is a yearly candle, okay, so every candle you see is 1 year, so that kind of told me that the high that was made for 2013, that should be the high for 2014. And also, the first day of the year was bearish. That usually tells you that the year will be bearish. The first week was bearish, and the first month. So, all these kind of factors tells me that the SPY for the year should have a bearish downward year. And sure enough, we, right from the January 1st, we started seeing weakness. Tested a high, never could take it out. Made kind of an M top here, and the measure move did take you to these areas here, and sure enough, all these ideas are working out. So I'm a little late to the game, so let me get back to the SPY meeting, late to the game meeting, updating you guys with some of these levels and stuff like that. So I'm going to show you what I'm seeing right now as we enter the new year 2014. Right now, I was looking for support at this level here. We made two kind of, I guess you could call these tweezer bottoms on the daily chart. I didn't like it because it was inside a red candle, but sure enough, I did call for a retrace to 177 as it looked like it wanted to stall out here, and we did test that today. And it is testing this breakdown as well. If you measure this trend line, it is kind of back testing here, but it's all going to depend on the job number tomorrow. So you got to be more of a neutral stance for tomorrow. But I am expecting more upside, a little bit more upside until you could reshort this market. See, you notice that the death cross is right here. These two moving averages are starting to come down, which is the 20 and the 50. So any kind of pattern, I'm looking to reshort this market. I am a little bit long here into the jobs number, just a little bit, just some, just a nibble on some longs here. Very little SPY calls here, the weekly. So I'm expecting a move up to 179 at the max. Okay, so that's the measured move of the bear flag, bull flag. Sorry, on the intraday. We did seem like we recaptured this. Trend line here, so it does look like it wants a little more upside. And if you look at all the other indexes as well, like the IWM, you made doji candles. You look at the Qs as well. The Q's also made a doji candle, and it looks like we're just stopping at the 150 day on the Q's. It's the 100 day. On the IWM, it looks like we found support at the 150 day. Right here, this purple line rising, first hit of it, and also on the SPY as well. We're hitting the 150 day. Made a nice doji candle. This is pivot right here. We held that pivot, and we also held the 150 day here as well. And if I grab a fib, let's see what kind of fib we can. I think near a 50% retrace, but let me take a look and be sure of that. Grab this really fast, and it looks like, yeah, we pierced through a 50 day the 50 retracement off this October low. Okay, let's go into the intraday right now. Like I said, I'm expecting a nice bearish retrace. It shouldn't take out this red candle, but that's your first stop tomorrow. If we gap above it or gap, let's see how it behaves around this area. This is your first reference spot. Not really major, but it is a big red bearish bar on bigger volume. So any kind of close above it on the daily chart will wipe away this bar, the bearishness of this bar. And we have to contend with this green line, which is 179. And ultimately, you have to deal with this declining moving averages, which I believe if you get up right into it and make a sideways base like this, and you do have a chance to break up. But to me, it looks like it's going to consolidate, and I'm going to look for a bearish pattern into these two moving averages and then look for a short. That's what I'm going to look for. I think it's going to not be that simple. I think it's going to be probably a bigger pattern that develops here ultimately, but we'll see how it behaves right here. I actually did short some calls around the 179.50, and it's a little bit on the risky side because of the job number, but I am trying to accumulate more shorts, so I think this is a level where the market will stall out around 180, which is the 1800. Around the 1800 level on XPX, the cash index. Let's get it into the intraday really quickly, as I've been going over that pretty long time on the daily chart. You can see you broke this trend line right here. This was your trend line ever since the fall, starting in 2013. So we broke that. So that's got to be a short-term sign of strength. It probably wants to consolidate here or reverse. So right now it looks like it wants to test this trend line here. See, on the intraday, we did test this red line, which was the one. See how this was support before, and now it's at your reference point. And draw it across. It should be resistance on the way back. This is the 177, 177.30-ish, and the low right here is 177 even number. So see how it consolidated here, and it doesn't look like it wants to bust through it. Your first level on intraday basis will be this pivot here, 178.20. That's minor. I'm ultimately looking right here. If it does get here, I will take off my calls though. I will sell my calls here, and ultimately I am in the 190, 179.50 bear call spread. So if I get assigned those, shares, that's fine, because I'm looking. I think this market ultimately will head lower, so I don't mind that at all. Nice breakout here, double bottom. The measured move did take you roughly to where it consolidated. So this is a nice W pattern here, and if you measure out the move, look at that, beautiful, isn't that just absolutely amazing right there? Just measured move, hit target beautifully. So I think it has a little more upside here. Like I said, it depends on the jobs numbers on Friday. Let's go to some of these leading stocks. Another reason why I knew we were going to bounce. We made a lot of doji candlestick patterns, and just above the 200 moving average, we are oversold. So let's look at some of these charts. I have nailed some of these charts that I nailed previously. I nailed this Dollar Tree short, beautiful bear flag. I called it out weeks ago, but I wasn't making videos at the time, but I was eyeing this. And a beautiful move here. It actually met the measured move and some, but now we got to bounce. Why did we bounce? Well, first of all, we have I believe the 20-month moving average hit right into that right there, guys. You read all these time frames. You got to read all these time frames, put them together. See, and that's how I found that. Also, the 50 even dollar number, which is also beautiful. Pierced it right here, pierced it, and also the 13 EMA, or the 100-day moving average right here as well, 100-week moving average, sorry. And that was a beautiful play right there to the long side after a nice short, so I could just change directions just like that. Corn is a beautiful bull flag that's playing out. It already hit resistance on the weekly chart. On the daily chart, let's go over it really fast. Don't want to be too long on it, but look at this big green igniting bar, and look at the volume on that. Inside candles, and sure enough, and the moving averages are starting to curl. I alerted this out on Twitter. Beautiful move here, and it looks like it wants to consolidate more. This candle is bearish, so it will keep it in check for a while. So let's see if it consolidates here to go higher, or it pulls back. This candle is bearish, and the volume as well. But I think the measured move, it does take you higher, and look, this chart's been beating down quite a bit. So I think this is a pretty decent play. I think it has upside to pretty much 32.5-ish area off the measured move. Let's go to TLT. TLT had nailed that as well off the 200-day, pierced through it, pulled back. And let me show you why this level didn't hold. If you look on the bigger time frame, there's a more dominant level that you want to keep track of. Okay, so yeah, the 200 moving average is resistance here, right? Clear resistance, and there's also a pivot here. So that can also be your reference. But what did I say about lining up other time frames? You have to line up other time frames. Let's look on the weekly chart, see what we have on the weekly chart. All right, the daily chart is good, but we want something else. Whoa, 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 what do we have here? Look what we have here. Declining 50-week moving average and a 200. See how it's going to almost death cross into the 200 here? See how you add that with this pivot? Wow, that just increases your odds so much more, right? You also have a time count here, so I was able to nail this on Twitter as well. On the monthly chart, let's go take a look at that as well. Let's see the monthly chart, see if we can add any more, factors. Wow, another one, another death cross. 10-month moving average into the 50-month moving average. So that's going to be resistance. That's why I was able to call that out on Twitter. Beautiful pullback there. Let's go to Amazon. Amazon, wow, beautiful drop in Amazon. It's a shame it didn't get to my level of 320, I believe. But did make this nice doji candle on the 150-day. Everyone's expecting the 200-day to get tagged. Sometimes it just, a lot of times it just doesn't get there. It's never that easy, the markets. But I was looking for a little bit of a pierce of this level around 320 to 200. That would be, the level you would dream about. It's gap fill anywhere in the zone where this gap fill is and this red line. That would have been a beautiful gap window over here, 320 with the 200. Oh, that would have been astonishing level. I was waiting for that. Never got tagged. After the 3-day rule off earnings as well, that would have been beautiful. A 3-bar surge into that level would be an ideal. That would be just a level you would dream about, a pattern you would dream about. And we are making a nice hammer candle now, but we have to see how that closes on Friday for the weekly chart. Monthly chart, I believe you also fell into, not quite. I guess you can make a case that you retested this upper trend line that you're riding here. So I retested that. So let's see what else. Twitter. Oh wow, Twitter. On Amazon last week I sold puts below 320. Okay, so I collected premium there. As you guys know, if you guys remember, I do sell a lot of premium. Sold premium here too in the 40s area. I think that's a level that I don't mind accumulating the stock. I mean that's pretty much where it started trading as I IPO'd early in the year of 2013. Okay, let's look at Twitter and where I scalped it. Beautiful scalp, $50 level. I knew it when I was watching this after hours. It gapped up to around 72. I think it was a bat pattern. If you follow harmatic patterns, it did have a target. I think it was 88% retracement right into this level. Went to like 72 bucks, and that's where it reversed after hours and went all the way to 54 bucks and found support there. I knew that $50 level was going to be amazing. Okay, just based off these measured move. If you measure this move here as a zigzag pattern, it came out to this area. If you measure those other measurements as well, I can't think of it right now, but there's also some fib retracements right here. It looks like the 161.8 extension in that area. Okay, and also most importantly, $50 even number, which is right here, and also this was the IPO high. Then that was the number one factor right there. I mean, that was the breakout level. You can see it better on a weekly chart, but that was where I went long intraday. Right here, it's really tough to see it, but this was the high right here. See this candle here? See this candle? This is the IPO week, and the high was 50 bucks exactly, and this is where it broke out on a bigger volume. That's what ignited this whole move. So pretty much it's just a retest of that breakout area. So that that's going to be just a fantastic spot. And I just took my profits after about 10 minutes. Really quick trade. I mean, if it does get in these lower levels, I will look to perhaps accumulate, but that was just a quick day trade. I mean, you have to understand after earnings, you have to give it 3 days. Even though this is a nice candle right here, this is kind of a nice, I don't know what do you call it, whatever, hanging man, whatever, it doesn't matter. But you can recognize the formation that this candle is bullish, but you understand it is off a big gap down, and you have to give it the 3 days. So just played it as a day trade, and that was some beautiful, just fantastic profits. Just bright and early in the morning, right there, first 10 minutes of the day, right into that level. And what a bounce you got to the 54 level, which was the support. So you notice how, this is a perfect example how support becomes resistance. Support. Previous support becomes resistance. If you look at 54, that was the support during the after hour session. Okay, let's see if there's anything else I want to look at. It's been a while, so I'm a little bit rusty, guys, doing these videos. But I think, is there anything else I want to touch base on? Pretty much, I think that's it. Can I look at Apple? I guess Apple does look like, it did make a nice bearish retracement here, nice bounce. Didn't get to the 200 once again, as like I said, it doesn't get there. It's not that easy ever in trading. That's why I like to sell premium. If you sell premium around very important levels, that will give you time. That's pretty much what you're looking for. You just that time decay, and that's how you collect premium. And by being able to read the charts, you can sell premium at spots of the chart where it will not get there, and time decay will just take its course, and that's how you collect the money. So this is a previous pivot here, and it's retesting that. It's gap window. So let's see how it behaves here. You can see if it makes a sideways base here, but notice that you are declining moving averages right here. It's okay. So just like the SPY and a lot of these other charts, you are starting to have a downtrend according to these, but you are still above the 200. But now you're stuck between the 200 and these two moving averages. Okay, so this is the 50, which is the green line, and the blue one, which is the 20. So you have a death cross that came here, and let's see how it behaves here. Not much to do here on Apple. See. Ultimately, I think this market is headed lower, so I am looking for a short-term bounce, and then ultimately later on looking for shorting again, and which I will be selling beer call spreads. That's pretty much my strategy. So let's just do it by day. Tomorrow is a big announcement, so we'll see how that goes. So far, up beautifully, up 6%. For the year so far of my entire account. That's pretty decent. So let's see how it works tomorrow, and hope you guys traded it well. I'll update you guys. I'll try to continue to update you guys, and hope you guys have a good one, and I'll talk to you guys later.